shipping capital markets are definitely open right now. Bonds are very hot. We're seeing a lot of equity trades, but less so than the bond market. And there's a number of IPOs that are coming out. So they're usually on the smaller side here in the U.S. You're seeing a couple larger ones in Norway, but the market is open for larger companies to IPO here. I think the key points were shipping companies have money. They're doing a good job deploying their capital. The markets are open, and I think we're going to expect to see some M&A to continue. We've seen a lot of M&A recently. There's been big fleet-wide acquisitions. There have been big public-to-public mergers, and we expect that trend to still continue.
Shipping's had a great 4-year stretch now, and there's a lot of alpha in shipping. It's not correlated with a lot of other things. It's not correlated necessarily with global growth, although you could argue containers is. It's not highly correlated with other segments. And so for these investors to understand the dynamics of the various spaces and to make intelligent investment decisions, and for the ship owners, they don't have the luxury of changing their minds necessarily in 3 months' time or 6 months' time, like you do with public equities. As Hugh talked about, the second-hand volumes. So you've got elevated asset prices, and if you look at the older vessels, the 10 to 20-year-old vessels, and you look at the number of transactions taking place this year compared to last year and the year before, the market's being held up by a small number of transactions, and that concerns him. But if he were to build up a fleet and change his mind a year from now, the liquidity of that secondhand market might not be good enough to get him out of his position. I throw shipping within transportation. I throw transportation within industrials, and so I view them as being somewhat connected, even though they're not highly correlated. The shipping industry doesn't necessarily trade the same way the other transportation segments do. Shipping industry has an interesting set of dynamics. In some cases, you've got commodity prices, which are an important part of the equation. You've got supply and demand of ships. You've got ultimate demand for that commodity that may or may not be related to what's going on in the commodity price. And so there's a set of dynamics around shipping. And the ship owners that show the discipline, and not everyone has the luxury of buying low and selling high. Sometimes we buy in the middle, sometimes we sell in the middle. But the discipline about how you keep a balance sheet that is strong enough, not debt-free, but strong enough, and how you invest across the cycles is very important. It'll be a factor for investors when the ship owners get a premium day rate for being greener. When that dynamic starts to happen on a more regular basis, then it's going to be a factor for investors.
Last 6 months, we have seen a cash-rich environment for global ship owners because of the, regional conflicts and wars and the extreme climate this year. So the ships have traveled far, like longer routes. So they have great cash flows. But that also means less financing at the moment. And also, because we are waiting for the U.S. election result, and this has been a high interest rate environment, so that is a factor too. So I would say that this year has been slower financing year for shipping. But in the meantime, it's good because the cash flow for ship owners are great. We focus on blue economy, so obviously it's a larger concept than just the maritime sectors. It relates to everything, different sectors for the ocean. But sustainability and decarbonization is a key part of the maritime sectors. So we discussed about alternative fuels in the future, and we did a quick fire round survey asking the panelists' thoughts on the alternative fuels, and you see that they have different perspectives. And I feel that in different regions, people have different preferences or beliefs on the transitional fuel or alternative fuel. I think number one is pricing, because obviously at the end of the day it's a cost issue. So the owners and the financiers need to look at the price and who is paying for the alternative fuel, where are the financing sources. And second of all, I think it's the infrastructure. So because it's not just on the ship owners or on the fuel, you also need the infrastructures onshore, on the port. So the port needs to decarbonize too. And also how to, for example, to capture CO2 on board, how to capture them, how to store them. All this infrastructure, the supply chain is a key factor.
I'm very optimistic about quite a few sectors. I like dry bulk shipping, especially capes, but I look for asymmetry in my investments. So there are sectors which have such little good news priced into the stocks, like LNG, that even any slightly positive news could send the stocks up 20%. The challenge right now is ship owners, private ship owners have a lot of money, and they have to have a reason to list. But if you're a large ship owner and you run an ethical operation, you will ultimately get a higher valuation from the capital markets.
One of the key points that was raised during the panel is the linkages between the crude tanker sector and the product tanker sector. We saw this summer a lot of vessels, crude tankers, transporting refined petroleum products, cleaning up to do so. We have seen in the past them doing so during maiden voyages, so it was something new, and it impacted the market strongly. However, the outlook for the crude tankers next year is very positive. There is going to be strong growth in oil supply, irrespective of what OPEC decides to do. There is talk of them potentially unwinding some cuts from December, but even if that were not to happen, we're going to be seeing possibly an increase in oil supply of 1.5 million barrels per day next year, which would be very supportive for the crude tanker market. And so the strength in the crude tanker market, which is also going to be linked to the very low deliveries for these vessels, should also help the product tankers next year. Green shipping is very much an important issue for us. We are striving to make our vessels as efficient as possible. When they stop for special surveys, we are installing energy savings devices like propeller boss cap fins, eco nozzles, Mewis ducts. We are also using low friction paint. We have a number of operational measures also which we take to reduce consumption of our vessels. And we are working always to keep and control a competitive fleet, also through the disposal of some older vessels. We sold the oldest vessel in our fleet at the beginning of this year. And we have ordered 4 LR1s, which will be delivered to us in the second half of 2027. And these vessels will be the most efficient in our fleet, even more efficient than the vessels which were delivered to us, the last vessels which were delivered to us in 2019. We are benefiting currently from some exceptional disruptions. And of course, if these disruptions were not to be there in the future, demand for our vessels could be negatively impacted. The disruptions are the Ukrainian war and the disruptions to trade flows in the Bab-el-Mandeb Strait. However, there's an underlying strength to the market. There was a dislocation of refineries in the last few years, which has contributed to the strong market, with new refineries coming online in the Middle East, in Asia, gaining market share from older refineries in Europe, in the US, Atlantic coast, and in Oceania. And we still have quite limited fleet growth next year on the product tankers, especially in the first half of the year, and as I mentioned previously, on the crude tankers throughout the year. And so we believe we should be benefiting from very strong markets also next year.
There's been a reasonable amount of consolidation among various aspects of the public markets. I think that is likely to continue going forward, and we're expecting some of the bigger companies to get even bigger. We discussed changes in fuel consumption, and that's happening, but slowly, probably more slowly than international markets are. Also, again, we talked about consolidation. That seems to be a trend within the U.S. Markets as well. The market has been reasonably good, and usually that is helpful and bringing new companies to the market. I don't know that it's going to be another wave of new IPOs, but I think that it's possible there could be 2 or 3.
I think the shipping sector is very interesting at the moment, particularly geopolitically. As far as ship management is concerned, ship management, third party, second party, as I prefer to call it, is expanding. More and more traditional owners and operators are being attracted to the idea of outsourcing, or insourcing as I prefer to look at it, of services. And most of the big ship managers are adopting a platform of services concept and business model where it's not just ship management that they're offering to their clients, but a whole panoply of other services. I think as a group our growth is steady. We're not wanting to overextend ourselves, we're not wanting to get too big, we're wanting to be closer to the clients and very much make this a personalized, dedicated, tailored service for our clients rather than a commoditized product. And I think that's the challenge of any service provider, not to provide a commoditized service, to make the client feel that he or she is the most important client to that service provider. So very much on the tailored side, very much on the insourcing side, getting away from this third-party ship management concept, which is a little bit of an anachronism now, but really insourcing these services and partnerships with our clients is the way to go. Green shipping is, of course, it's on everybody's agenda. I think it is far too early to make any bold decisions based on green shipping or alternative fuels. There are too many questions, and the whole environmental debate is at too premature a stage. There are so many factors that we're simply not even aware of yet that will decide that debate, and we're already seeing movements away from a view that alternative fuels are the future to a view where taking carbon stripping and biofuels is perhaps the future. So using existing fuel resources but decarbonizing them as a much cheaper solution than gearing all of the infrastructure, all of the supply away to these green alternative fuels. So much too premature to make any decisions. Of course, we have to advise our clients on alternative fuels, and that's what we're doing. And of course, wearing my owner's hat, we have our new builds are methanol ready, so that they can adapt hopefully easily if methanol is one of the fuels of the future, which it could well be, but there'll be again a whole plethora of other opportunities and possibilities.
It's been a very exciting time in Pangaea in the last 6 months. We just announced a couple of weeks ago a transaction to acquire 15 dry bulk handy-sized vessels in an all-stock transaction that will, when that deal hopefully closes in early December, will bring our combined fleet to 41 ships, which we are terribly excited about doing that and using our public platform as a company and acquire these ships with using our stock as currency. It was very insightful to hear from everyone about the different approaches to how each company manages their risk and manages their exposure. We do that through a portfolio of cargo contracts and real customer service that we feel gives our company a sort of a hedge against worse markets. So even if the macro outlook that we all share is very positive for the business, we're very actually also excited about the growth of our underlying business and our customers' demand for our services. We are investing a lot of resources in optimizing the fleet we do have. We can't forget about the ships that are actually trading while we're talking about alternative energy. So we need to make meaningful investments in the ships we have. We do that through better paint. We do that through various other energy-saving devices, and we do that through more smarter AI-enabled operation and routing of the vessels. So we avoid bad weather and other things that will increase our emissions with no output for it.
The interesting thing about ship finance for the last 6 months is companies have had very strong revenue, so they've been paying down their balance sheets, and not a lot of refinancing is taking place. Although I think what we're going to see over the next few months is, or the next year or so, is a lot of refinancing. So you'll see a stronger market for financing, particularly bank lending and the bond market. I think the key point was sort of the combination of traditional bank lending being a very stable part of ship owners' financing portfolio, and then adding in as necessary or helpful alternative financing. The other thing I think that was a key point was that the shipping industry is right now generally very strong, and they're putting ship owners in a nice position when it comes time to negotiate the refinancing of debt. And they don't seem too fussed about who's going to win the presidential election. I think what you'll see is because of the way that there's alternatives to traditional bank lending, everyone is able to manage finance right now. And unless you change the system so that there are requirements put on the actual ship owners as opposed to the parties providing them with financing, not much is going to change in terms of the ship finance system, because I think right now everyone is able to finance their needs regardless of whether they're really fully embracing decarbonization. And I think Robert made this point, which was a good one, which is you really need to change sort of the whole regulatory framework so that it's the shipping companies that are required to take this more seriously and not just the lenders and the other financial sources.
Alternative fuels are in fact slowing down shipbuilding in the United States as companies are deciding what fuels they can build into their ships for the future, given that Jones Act ships last a long time, and so the, say, 40-year life cycle makes it difficult to pick a fuel now and then be really stuck with it for potentially 40 years. The Jones Act has had an ebb and flow in the course of my career. I've been doing this for 37 years. And what I've seen is that companies that are built up by families eventually want to exit, and so they will go public. And so right now we don't have many family-owned companies that are looking to do that. But I would expect that over the next, say, 10 years, that would happen again and start the cycle. The U.S. is kind of behind Europe in actually enforcing decarbonization in the maritime sector, which is somewhat odd. But we know it's coming, and so I think we saw in our panel a lot of discussion about what shape that might take. There's this decarbonization action plan coming from supposedly by year end, and so that plan may well include things that ship owners in the U.S. are going to have to follow. So I think nobody really knows what fuel to shift to, and that's, as I mentioned earlier, that's really the problem. So trying to decarbonize is really The Jones Act companies are being creative. As Sam Norton said from OSG, they're working on decarbonization capture. And so maybe we'll see more of that in the interim.
I think in the last several months we have seen a softening in the LNG shipping market, and it's reflected in lower charter rates, both in this, particularly in the spot market. Term rates also have come down somewhat, but that may be also a function of lower interest rates, which cut the capital costs of the ships. We really focused on what are the drivers behind softening prices this winter. Normally this time of year you would expect spot charter rates to be increasing. They're not. That, I think, is a function of a loss of the arbitrage opportunity between the European and Asian gas markets. The prices have closed, and so it makes sense, particularly for U.S. exporters, to send their gas to Europe, and that tends to reduce the demand for shipping, and so the rates, spot rates have come down. On the other hand, what we also see is that many of those spot charters are off-takers recharter or subchartering vessels that they control rather than owners trying to place vessels that they have no business for. So that's one of the dynamics. The other side of it is the longer-term impacts. What is Europe going to look like as a gas demand center over the long term? What is the longer-term prospects in India, in China, and in the emerging Asian markets? Where a lot of the rest of the shipping industry is switching to LNG as a preferred fuel for marine propulsion. LNG's been there since the very beginning because the ships run on the boil-off. So they're running on LNG to start with. It's hard to improve on that.
I think the whole maritime industry is doing pretty well, and same with our service. We are growing in terms of our services and also the resources. If we look at challenges, we see that typically now the decarbonization pace are a little bit slowing down, and then the fuel production for decarbonization is also are not as fast as we expected. But on the other side, we are very happy to see the ship owners are taking initiative in terms of doing the energy efficiency as well as finding the alternative fuel. What is also encouraging to see is ship owners are more concerned about the crew and in the area of the decarbonization and digitalization, crew competence and crew safety, where we are able to contributing quite a lot. If we look at the opportunities, we see that, of course, we see the challenge on the decarbonization, but on the other side, we see the need for example, like carbon capture and storage, which will be utilized as one of the key decarbonization measures. And in order to promote this one, we are seeing that there's a potential need for port to invest carbon storage and transportation facilities. This is actually creating a demand for this kind of services where we see a great opportunity. On the other side, if we look at the challenges, I think we all agree that regulatory uncertainty is one of the big challenges. We are eager to see how the IMO next meeting, MEPC 83, will come out with the well-to-wake regulations.
Our operations have very much focused on the next 1 to 2 years time frame. And there it's still very much an issue of looking for more efficient ships, investing in paints, in energy-saving devices, etc., more than in alternative fuels. EA stuff, investments you can make today where you generate a return in the near term.
Liberty Green focuses on supporting the supply chain and the services related to the offshore wind space. And particularly in the United States, the offshore wind space right now is evolving. It started approximately 7 years ago. The projects have been slow coming based on several factors. Permitting's been a major impediment to the industry. And recently, just the dollar issue, which is two factors essentially, which is the cost of doing business and then how much you can generate is from a revenue standpoint. But things are starting to develop. There's more leases and permits that have been issued, and the industry is now in the United States starting to expand and stabilize and grow. The major message, which is something that we know as an owner, is the capital component and the risk associated with being involved in the offshore wind space. Crewing is an issue globally and more so in the US, and I think there's a lot of steps that have to be taken there. There was a discussion about alternate fuels, and again, as I mentioned myself on the panel, in the offshore wind business, since it's essentially about decarbonization, alternate fuels was a key factor, and it's something that's still being considered, yet because of the additional costs involved, hasn't been fully embraced by the developers. As the industry starts to grow out, there's a large capital investment involved. There are significant risk factors involved in the business, which you may have heard from the panel. The contracts to date haven't supported long-term engagements, which is a traditional approach in the shipping industry. You tend to lean towards more long-term contracts. I think as the business matures, there's a possibility for public entities actually entering the space, but for now, mostly private entities are the ones that are going to take over.
Our sector has been booming for the last few years, mainly due to the fact that China has become a big exporter of vehicles. It's not that we are transporting that many vehicles from China, but what it means is that the global fleet is tied up in longer passages, as a result of which there is limited capacity in our space. And that means that prices has come up at the same time as there is a significant amount of exports around the world, and that has contributed to the financial success of our business. If you look at the sort of challenges, what we see now is that, of course, supply chains are challenged around the world. We handle that through very, very close dialogue with our customers, that how do we best route the cargo around the world. The other thing which is of high focus within our industry is the whole decarbonization aspect, and we've set ambitious goals in terms of decarbonizing and reducing the emissions from our global operations. But the supply chain challenges has probably been the one topic that has affected our business the most. But as I mentioned on the panel I just participated in, those effects have actually been positive for our industry because it has shifted the supply-demand balance in our favor. I have quite an active schedule with investor meetings this afternoon, so I realize I'm going to miss a few of the panels, but I always find it very interesting to participate in these conferences because no matter whether you're a ro-ro shipper, or LNG shipper, or oil, some of the challenges you face are similar, so it's always interesting to hear other panelists' views and perspectives on how to deal with the challenges on a day-to-day basis.
We went from an incredibly strong rate environment, probably unsustainable, to more normal rates right now. We saw a little bit of weakness over the summer because of some of the export facilities in the U.S. shutting down because of the storms, but now we're seeing things sort of coming back to more levels consistent with what we'd expect. I think it was that the ship finance markets are wide open. There are there are pluses and minuses to traditional bank finance and alternative finance, but for the larger borrowers like ourselves and some others, it's still a good time to be active in the debt financing markets. The product we transport, liquefied petroleum gas, is deemed by the UN to be a bridge fuel. So from that perspective, we're part of the energy transition. We're part of the solution. We have a number of ships that can burn LPG as well as traditional fuel, and we've installed scrubbers on a bunch of others. So that's one piece of it. And I think the broader piece of it is we're looking at a number of energy-saving devices to reduce our emissions. Longer term, obviously we're looking at alternative propulsion. We think there's still a little more work to be done before it's totally commercially right, but whether it's going to be ammonia, hydrogen, nuclear, electricity, we'll see. But we do think those are the future, and we'll see those in the next 10 to 20 years. And until then, we're going to continue to work hard to be part of the solution with the product we're transporting and the other energy-saving measures we're taking.
Our October forum, as always, aims to address the major challenges, opportunities, and topics in the shipping industry. So we go sector by sector, such as dry bulk, tankers, containers, LNG, LPG, and we focus on the opportunities, trends, developments, and challenges in each area. Then we address industry topics like green shipping, shipping finance, capital markets, geopolitics, and so on. As you can see, we have a great gathering today of industry leaders, both from ship owners, financiers, and investors, and we're delighted that this conference has gone so well. A couple of interesting things to say. Number one, shipping is in a very good era today. Shipping companies are doing well, global economy is doing well, companies are cash rich, so therefore there is an aura of optimism regarding the future. At the same time, there are a number of challenges like geopolitics, what is happening with the Red Sea, with Ukraine, with sanctions. Then we have the advent of technology that is revolutionizing shipping across all areas of operation, and we also have the challenge of green shipping. How do you invest today to maintain and renew your fleet in the absence of certainty regarding the ultimate fuel type? So very interesting topics to address. Also today we had with us at lunch Eric Holgren from the US State Department, who discussed the US policy regarding energy globally and green shipping. And then we had with us Dr. Vasquez Morales. He is the administrator of the Panama Canal, and he gave us a fascinating set of remarks regarding the role, strategy, and outlook of the Panama Canal and how important it is for the global supply chain. So overall, it was a great day, and we look forward to the next one. And I'd like to thank our partners, DNB, for sharing the heavy lifting with us, as well as, of course, the Capital Link team, the DNB team, and all the sponsors, and above all, the participants. Green shipping involves two areas. First of all, what do you do with the ships in the water? These ships, which are older, they need to be upgraded, they need to be well maintained in order to conform to the more stringent environmental regulations. So, and then we have Fuel EU coming on board as of next year. So companies are bracing for those. So the question is, what do you do to maintain and upgrade the existing fleet? That is the majority of the fleet in the water. The second question is, what do you do regarding fleet renewal? And a lot of ships are older, therefore you need to renew, you need to order new ships that are fuel efficient, modern designs, and so on. And that is where the real question is, how do you invest capital for a long-term asset in the absence of knowing what the ultimate fuel will be? It seems from the discussions we have heard today that LNG seems to be the fuel that most are focusing on as a transition fuel. Biofuel is another one. Of course, there are other alternatives, but I think what seems to be getting the most attention for the medium and short term is LNG and then biofuels. We will conclude the year with the Capital Link Investing Greece Forum in New York in December. So it will be quite a busy quarter.